Nasdaq and S&P 500 closed at record highs as investors cheered lower than expected inflation data with hopes of a rate cut in coming policies. Dollar eases while treasury yields climb. Asia Pacific markets opened higher, tracking gains on Wall Street, with Nikkei surging another 1% after a record high made on Tuesday. GIFT Nifty too indicates a higher start for the Indian markets. Oil prices dip overnight as traders awaited inventory report from the U.S. Energy Information Administration, while gold prices surged near the $3,350 mark following the U.S. CPI data. India's retail inflation in July eased to 1.55%, the lowest reading in 8 years, but this was slightly above the CNBC TV 18 poll, which predicted a reading of 1.3%. Oil major ONGC posted a mixed set of earnings, with profit rising 18% YOY to above rupees 11,500 crores, while revenue fell nearly 3%. Apollo Hospitals, on the other hand, posted a strong set of numbers, beating the street estimates. The company's net profit surged over 40% in the quarter. Hello, good morning. You've tuned into CNBC TV 18 and you're watching Power Breakfast with me, Vinny Motiwala. And subdued day is what we saw coming in yesterday for the Indian markets. But today, what we're seeing for the Asian markets in terms of an opening, a good opening that's come in there. Look at Taiwan index up 0.8%, Hang Seng 0.9% of gain. And other than that, whether you're looking at the Japanese index, record high levels again coming in for that. For Nikkei, we're talking about that one. We're seeing Topix also managing to hold on to gains of around 8.10 to 9% as of now. ASX 200, that's an Australian index, also opened up with very good and strong gains. So that is something we'll watch out for. After opening up in the gains, we're seeing ASX 200 has actually seen a bit of a correction as of now. So it's down 0.6%. But other than that, all the indices are managing to hold on to gains. Even the Korean index is managing to hold on to gains. What is Indian market looking like in terms of an opening that we should be expecting? 61-point uptick is what the Nifty implied open is indicating as of now for the Indian markets. Obviously, do not forget we had our inflation and CPI data that came in as well. So that was also a good data point that came in, though like I was saying before in the headlines as well, it's slightly above the inflation data point, is slightly above what the CNBC TV 18 poll was expecting, but nonetheless a good data point over there for the Indian markets as well. But that was the Asian market outlook that we have for you all this morning. Now, how is all this going to be impacting our Indian markets? We have a team of research joining in with us to set you up for trade, tell you which are the important stocks to watch out for in today's trading session as well. First up, we have Vamakshi, as always, to tell us what are the important cues to watch out for in today's trading session. Good morning, Vamakshi.
Good morning, Vinny. Yesterday, of course, was a wobbly day for our own Indian markets. The Nifty slipped over 200 points. Excuse me, from the day's high and closed below the 100 DMA. Indian markets actually underperformed some of its Asian peers yesterday. Of course, you mentioned Japanese Nikkei. The ASX 200 also hit a record high yesterday. The broader markets, though, they slightly performed better as compared to the benchmark indices, with the mid-cap index declining by only 0.3% and the small-cap index, in fact, ending in the green, although barely in the green. Now, when we look at the US markets, though, they had a very strong run yesterday. The US CPI rose at 2.7%. This is slightly lower than the 2.8% rise that was largely estimated. And with that, the S&P 500 as well as the Nasdaq advanced to record highs yesterday. Now, today, in terms of cues, we'll be watching out for a lot of earnings reaction. Remember, we're at the fag end of the earnings season. Keep your eye out on JSPL, Apollo Hospitals, Oil India, some new age companies like Honasa, Nykaa, NSDL, which just listed recently, Cochin Shipyard, PI Industries, as well as Nazara Tech. These are some of the counters that will react to their numbers. As far as earnings today are concerned, we'll be keeping an eye out on Jubilant FoodWorks, IRCTC, BPCL, Hindustan Copper, Muthoot Finance, as well as United Spirits. These are just some of the counters that will be reporting numbers. Of course, there's a whole list out there. Dredging Corp and MIRC Electronics will also be in focus because the board will be considering fundraising plans. Lastly, keep an eye out on the primary market. Bluestone's IPO closes for subscription today. So far, it has been subscribed approximately 0.7 times, and today is the third and final day. The GIFT Nifty, as you were indicating, Minnie, looks like we're off to a great start.
Thank you so much for that, Mamakshi. An interesting setup coming in for our trade in today's market. But what are the important stocks that you should be keeping on your radar? We have Gaurav joining in with us for that. Good morning, Gaurav.
Well, yes, first let's talk about ONGC. A good set of numbers is what we saw here. Although revenue has declined almost by 9% on a sequential basis, profit increased almost by 24%. JSPL also came up with good set of numbers in terms of EBITDA per ton, because India's EBITDA per ton has improved. Specifically, when we talk about profit, that has also increased almost by 12% on a year-on-year basis. Apollo Hospital, here also we saw good set of numbers. Revenue increased by 15%, while profit increased almost by 39% on a year-on-year basis. Now it stands at around 441 crores. Nykaa also reported good set of numbers, because when we look at net profit, that increased almost by 80% on a year-on-year basis. Let's move on to NHPC. When it comes to revenue, that increased almost by 19%, while profit increased just by 4% on a year-on-year basis. So a muted side is what we can say in terms of net profit. But on the other hand, let's also talk about NSDL. Here also we saw mixed set of numbers. Revenue declined almost by 14%, while net profit actually increased almost by 8% on a sequential basis, and this was because of 15% jump in the other income segment. Suzlon came up with a little bit of good set of numbers, because net profit there increased almost by 7% on a year-on-year basis. While let's also talk about Cochin Shipyard. Here also we saw some kind of good set of numbers, because net profit increased by 8%, and this was actually also higher than the street's expectation. Let's also watch out for Nazara Tech. Now, two news flows here. First is that when it comes to profit, it has almost doubled. Now it stands at around 51 crores versus what it was at 23 crores just a year ago. And at the same time, board has now approved stock split in the ratio of 1:2, and they have also approved bonus issue in the ratio of 1:1. So definitely a stock to track today. And let's also talk about Paytm. Now big news is coming up here. Now RBI has given in principle authorization to operate as an online payment aggregator to Paytm payment. Now let's not forget that this was banned in November 2022. So after 3 years, this relief is coming, and that is the reason sentimentally positive news for Paytm. And lastly, let's also focus on Translate Lighting, because company has now secured a fresh order worth 700 crores. So definitely all these stocks are going to be on our radar today.
Okay, thank you so much for that, Gaurav. And in terms of the final update that we have in Power Prep today, we have Mangalam joining with us to tell us which are the important cues that we should be keeping an eye out on in the world of FNO. Good morning, Mangalam.
Good morning. So if you look at the way the Nifty moved on Monday and the first half of yesterday, it told you that yes, the market does have a floor, but the second half of yesterday told you that the market has a ceiling as well. So we have Nifty, the Nifty Bank and the Mid-Cap Index, all of them selling off sharply in the second half of trade in what was a volatile session where, dips were bought, but as vociferously, all the up moves were sold as well. Yesterday's range tells you a near-term range that the street would be working with for the market. 24,703, the Nifty's high, is extremely crucial to cross for the bulls to have hope of another up move. And at the lower level was 24,465. The Nifty closed around those levels itself. And the GIFT Nifty comes up for you. That's indicating a start which is 61 points in the green. So immediately yesterday's high comes into picture. The FIS sold about 3,400 crores in the cash market. DIS bought about 3,500 crores. No change in the trend out there. But the FIIs, they continue to sell in index futures. In fact, it was on Monday where they, unwound some short positions, added some long positions. But yesterday they unwound all of that as well, added 4,800 short contracts. So if you look at the net contracts of, the FIIs, on August 8, it was minus 1.83. Then because of the up move that we saw on Monday, they unwound some of those shorts. It became minus 1.79. But now back to where it was, square one, 1.85 lakh net short contracts is what FIIs are in index futures, with just 8% long exposure, which is the lowest that we've seen in a very long time. And yesterday, the FIIs also sold index calls and unwound short index puts, telling you that they were fearing that there could be, some further downside on the market and upsides may be faced with some ceiling. Remember, the put call ratio, which bounced from 0.6 all the way up to 1.03, is now back to 0.8. And we saw call writers active at 24,700 and 24,500. Put writers who wrote options at 24,400 and 24,500 had to unwind their positions as the market fell in the second half. The 100 EMA of the Nifty, 24,530, is extremely crucial. So that's something we'll watch out for on the way up. And finally, a couple of stocks. Alchem saw some long positions being added. Astral saw some short positions being added post numbers decline. And Titagar, that stock saw a lot of open interest activity, entered FNO band today.
Okay, Mangalam, thank you so much for that. But on that note, we're going to slip into a very short break. Up next, global market action on the other side. Stay tuned in. Welcome back to Power Breakfast on CNBC TV 18. Now, in the US market, what happened overnight was that Wall Street ended at fresh record highs after a tamer than expected inflation report raised the possibility that the Fed could cut interest rates next month. The S&P 500 rose 1.1% to hit an all-time high for S&P 500. Nasdaq Composite also notched another record peak with 1.4% jump. The Dow Jones Industrial Average climbed almost 500 points. We have CNBC's Rick Santelli with the highlights of the US CPI data and obviously the positive impact that came in there.
Headline number, as expected, up 0.2 exactly. Strip out food and energy, up 0.3 exactly as expected. Year-over-year numbers, 2.7, that's the headline. That's 1/10 cooler than we were expecting, but it equals the rear view mirror. 2.7, well, how does it compare? 2.8 was February, 3% was January. So we have been sliding. The low for the year in this metric, 2.3, that was in April. And here's what I was looking at, 3.1% on the year-over-year core. Definitely hotter than expected. It's hotter than the rearview mirror at 2.9. 3.1 would equal February. The high reading of the year was 3.3 in January, and that was the highest since May of last year. So if I look at the data on the month-over-month basis, exactly as expected. If I look at the year-over-year, obviously we got a little bit warm on the core. Now, we look at it sequentially, the headline number is 1/10 hotter than the 3/10s, and the 3/10s core is 1/10 hotter than last month, 2/10s. The only one that isn't hotter is the year-over-year, 2.7 equaling last month. But we do see that expectations were for a much warmer number.
Now, the former St. Louis Fed President James Bullard is on the list of the potential Fed chair picks, and he believes that tariffs don't cause inflation and expects the Fed could cut 100 basis points in the next year.
I don't really think tariffs cause inflation. Taxes don't cause inflation. And so what you're seeing in the data is very muted effects that are one-time increases in the price level. And so you're not really seeing anything. And the committee's coming around to the view, I think, that this is probably a one-time increase in the price level and is not interrupting the longer-term trend toward 2% inflation. So they're ready to come down. I think they'll cut here in September, probably again later in the year. And as I said last time, I think you could continue that into next year. So you'd probably get 100 basis points by this time next year, and then you'd be close to the neutral policy rate.
So that's all the update that we have coming in from the US market. So on that note, we're going to slip into a very short break. Up next, we'll get to the latest on India's July CPI data. Stay tuned in. Welcome back and thanks for staying tuned into Power Breakfast on CNBC TV 18. Now let's talk about India's CPI inflation data that came in yesterday. For July, it came in at a 98-month low of 1.55%. Yet it was a tad bit higher than the CNBC TV 18 poll, which we estimated the CPI data to come in at 1.3%. Now, July CPI was expectedly dragged down by the food index. Lata is joining in with us now to give us more details on this front. Good morning, Lata.
Well, quite a bit of records, actually. As you pointed out, it is a 98-month low or something like an 8-year low for inflation at 1.5%, still lower than the still higher than the 1.3%, which our poll had thrown up just to set the record. It is 1.55 in July versus 2.1% in June, and year ago was 3.6. So, 3.6 itself is not a very high base, but you're getting just a 1.5% inflation. The food index is very important. The inflation has been pulled down largely because cereals and pulses, the weightiest elements, are falling even month on month, right up to July. Normally in monsoon months, they start rising because of traffic dislocation, but this time it's been falling because sentiment is so good with the good monsoons. Other things like meat, egg and milk have also been falling. In fact, food is also a record. It's a 78-month low. the food CPI. It's a deflation. It's minus 2%. It's minus 1.75%. The poll had expected minus 2%. The vegetable inflation year on year is lower, much lower, double-digit lower, but month on month it has gone up, and that's why you still see tomatoes at 100 rupees or even 80 rupees, even though the vegetable or the overall food inflation is lower. Core CPI is important to note, it is lower. It's 4% compared to 4.4% in June. And that means, the Asian disinflation is helping, base effect is helping. More importantly, if you exclude gold, then the core inflation falls to 3%. So all round, the numbers are positive, but the market won't react. It will react more to the US CPI number, which has come in lower than expected for July. It's come in at 2.7 against expectations or 2.8. So we may see a minor fall in yields in the Indian market, but no, the Indian bond markets are sulking for other reasons because there are going to be no more rate cuts. Don't expect this to have an impact.
Okay, Lata, thank you so much for that. Important updates that are coming in India's inflation data point as well as the US point as well. So keep an eye out on the yields as well. Now, on that note, Manisha Gupta is also joining in with us to give us the update that we have in terms for the commodities. What are we watching out for in terms of important cues that came in overnight? Good morning, Manisha.
Morning, Vinny, and thank you for that. I'll start with the crude oil prices where we are trading at a 2-month lows right now. Well, the U.S. crude inventories have shown an increase. The OPEC says that the demand for 2025 is going to be unchanged. And the U.S. Department of Energy also is looking at a global surplus in this year. That is keeping the prices in check. And in any case, by the time it's the fourth quarter in this year, most of the banks and brokerages believe that you could be looking at much lower crude oil prices. I want to put in a quick word for the metals as well, where gold is holding strong, the U.S. inflation reinforcing expectations of a Fed rate cut in the month of September with nearly 93% of a probability. That's exactly what the markets are working with. We also have seen some gains come in for silver, copper, many of these metals trading in the positive right now.
Okay, metals are trading on the positive side, but crude, that is the one which is trading at a 2-month low as of now. Thank you so much for that update coming in there, Manisha. But with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV 18. Thank you so much for tuning in. Up next, a Bazaar Morning Call.